All right, welcome to another edition of TAS Business Office Support call. And we are here for another week. So remember, we do these every Friday from 2 to 3 Eastern Standard Time. And goal and mission is to just empower the business office in all communities. We have a goal to do our job in supporting those leaders and for the communities that we support and the communities that we don't support. If we can do something to help the business offices be successful, then that's what we want to do. And so we are here weekly on Fridays to just talk through everything business office. And we'll do some screen sharing and just talk through some support avenues. So last week we kind of did an overview and we talked about the business cycle slash accounting cycle that runs parallel to the events in the community. And so we're looking through that um, business office lens, that accounting lens, as we have things that happen in our lovely communities. There's data that has to be captured, right? And in this regard, it's financial data. So we talked about an overview from the reservation process, calling that kind of the beginning, to residents moving into our communities. And there's data that needs to be captured, financial data that needs to be captured there, and everything that happens within that process of once somebody's in the building, unit transfer or some ancillary charge that need to be billed, or increase in care charges, all those things that can happen with while in that phase of being in the community, ultimately then going to the last phase where our residents move out of the community and capturing the financial data that's related to that, right? And so we looked at that overview on the call and just acknowledging that that's going on in the background and acknowledging that our business office leaders are charged with the responsibility of capturing a lot of that data. And that's where we want to help support and what this call is geared toward, to talk through different things, right? There's different situations that our teams are presented with, and understanding that business cycle, that accounting cycle, and what needs to be recorded, because that ultimately rolls up to the financials that go into investors and operators to help them make decisions. And so we want to do all we can to on the front end to make sure that we got the good processes in place so that the data is being recorded accurately, so those financials can really mean something and help prevent reclasses and all that stuff on the back end that the accounting team may have to do or not. So within that big overview, today's call, we're going to look to dive into that first piece, in this reservations. Once again, reservations, move-in process, everything that happens there, and then ultimately the move out and the things that happen there and discharge. So let's look at the financial data that comes with a reservation, right? So we know at our awesome communities that the marketing teams are working hard, right? And that data is being captured. You know that, just very data driven, and in terms of, we want to know leads, we want to know, activities that need to happen, and tracking activities, and any CRM is going to equip the marketing teams with that. And so all that stuff is going on, and then we get families who are interested in moving into our communities, right? They go tour, and your marketing team again is working hard and getting them in the building. And so somebody decides to tour and they say, hey, I really like TAS Senior Living. Okay, so now they put down a deposit on the suite. So they're not ready to move in at that time, but they do want to put a deposit down on the room to essentially take that room off the market, to reserve it. And so there's financial data that needs to be captured there, right? And we want to be able to account for that, right? And so this call, we're going to dive into the reservation, right? So you got a reservation agreement. What needs to happen with that reservation agreement? sometimes our business office leaders just get a check that's put on their desk and they need to know, okay, what am I doing with this check? What am I doing with this check for $2,000? What am I doing for this check for $5,000? So one, business leaders, we want to make sure that we're getting the agreement that goes with that, right? With the check, there should be, depending on how your community is going to do it, some type of reservation agreement that acknowledges the fact that, hey, Mr. Jones put down a deposit for this room, and so we need to account for that event on the financials, right? So the business cycle, the accounting cycle that runs parallel. And so we'll look at a few examples. I want to look at how the financials are represented there. So anyway, we got the check, we got the reservation agreement. So we made sure that process is in place, that we actually are getting the reservation agreement is being passed to the appropriate hands and ultimately being in the file. So we got this reservation agreement. So now we know that we need to go to our accounting system, wherever that is. Yardi, we like Yardi, but there's plenty of property management systems out there where you go in and put that charge in, right? So we got to book that charge to the ledger. And if you've been the business office for any amount of time, you know all about booking, posting charges, manual charges, and all that stuff. So that's a charge that we would go in and charge to that customer's account, right? So that then we can apply a payment towards it, right? So we're going to go in, we got the reservation agreement, we got the support, we got the check. So we're going to charge the ledger's, the resident's account. So now once that charge is done to the resident's account, right, now they have an AR balance of that $1,000, that $2,500, right? And then once they have that, now it's like, okay, now that I've charged the resident's account, now let me make my deposits, right? So let's just say this is the only check I got. So now I have to put this money into the bank, right? It's the reason why we don't hit it against the accounting system first. We got to put this money in the bank first. Always a good control there. We don't want to apply the cash receipt in an accounting system before we put the money in the bank, because business leaders, we know you guys are extremely busy, and a lot of times you have a line outside your door, and you put it in an accounting system, and then a resident comes in or a team member comes in, and next thing you know, it's the end of the day, and then that deposit is made, and then for whatever reason it's not made for the week, and now we've told the accounting system that we received cash and we haven't really put it in the bank. So if your accounting team is dependent on that general ledger to say accurately what the cash is, and then they're writing checks based on that, then we can get into a whole mess of now we've told our accounting system that we have cash that we really hadn't put it in the bank yet, even if it is sitting on our desk. So we always encourage a good process there where you're always putting money in the bank first, and then you go into the accounting system. So you've put the money in the bank, right? Many times in our communities, the business office staff is set up with check scanners. So if you are making bank runs and you're not using a check scanner or some type of process to make it a little easier, then I would highly encourage you to say, hey, like, what do we need to do to get a check scanner, or whatever your protocol for your community is. So you put the money in the bank, and now once the money is in the bank, we have the deposit slip. Now we turn to our accounting system, and we want to now apply that charge to the resident's ledger. So that charge that we put on there, that accounts receivable that's outstanding, now we take this money and put it against that, and now we satisfy the accounts receivable, and then we have the cash in the bank, right? So that reservation process, pretty simple process, but just understanding the context of that, understanding, when the marketing team is doing their hard work and collecting those reservations, and you get a check on your desk, what do we need to do? Make sure it's coming with their reservation deposit, and then there's steps to record that financial data. Okay, so I am going to share my screen again, and we'll just kind of look at. I love these calls just to kind of dig into, because sometimes you may have never, there's a possibility you haven't seen this before, right? You haven't seen the financials and how they work as you are putting in your entries, and we really just want to close that gap, right? We want to explain in a way where the accounting doesn't seem so complicated. So when I go put a charge on the ledger, what does that do to the balance sheet? What set of financials is it hitting? Is it hitting the balance sheet? Is it hitting the income statement? So I'm going to share a screen again, and then we'll just look at a kind of some real life examples, right? So if we are saying step one, right? So we've got that check, we've got the reservation agreement. We're helping train our teams to make sure they give us the documentation that we need. And we're saying, okay, now I need to go into my accounting system and I need to charge the ledger, right? So if we're calling that step one, okay? And so in this case, let's just say the reservation deposit is average for our community is 2,500. So here at TAS Senior Living, this is the normal amount for reservation. Okay, so I have that. I'm going to go into my accounting system. I'm going to charge it. So business leaders, when you do that, and when we charge the ledger, okay, what we're doing is make sure this screen is visible. What we're doing is now we've charged that residence account. Okay, so AR on the financials increases about 2,500 because now there's an open charge in that account. Also, there's a liability now that we want to be able to recognize because in many cases, if the resident does not move in, that deposit potentially is refundable back to them. So in accounting language, right, we have to show that as a liability and not as any type of income. Okay, so we're doing step one, we're charging the residence ledger, we're getting to see accounts receivable grow, and we're also going to see the, in this case, we're going to call it, let's make it reservation deposit, okay? But it's a liability account, right? And if you take any type of accounting class, assets need to equal liabilities and equity, okay? So we charge, step one, we charge the residence ledger, okay? Now, like we talked about good process, and now we're going to put the money in their account. And these two essentially happen almost simultaneously, which is what we want, but we're going to separate it. So now we want to put the money in the account. So now you're going to go with your check scanner and make a deposit. Again, hopefully you're not having to do bank runs. We're going to make a deposit into the check scanner. That money is going to go into the business account. It's because we received cash, right? And I'm going to do it intentionally slow like this because really the cash wouldn't increase until we booked it against the accounting system. So we got cash in the bank now, effectively. And so that would happen right with number three. And then we got to go into the accounting system and record the transaction in the system. And then once we do that, truly that's when cash increases and then our accounts receivable goes away. Okay, because now we have satisfied that accounts receivable with the cash, right? So at first when we did the charge, right, number one, we didn't have the cash in the bank yet. Then we put the money in the bank and batched the receipt in the accounting system. Now we've got that cash. So there's no AR outstanding anymore because the resident has paid on that account. And so we got cash in the bank, which equals the liability that we have on the books for that one deposit. Because again, unfortunately, if that resident doesn't decide to move in, there's cases where that deposit would be refunded back to them. Okay, so if that's the first time you've kind of seen it broken down like that, that's what happens on the financial statements. And so whether it was 5 deposits for the month or 1 deposit for the month, that exercise is happening. So as you are going into the residence ledgers and as you are posting charges, you are increasing the AR on the financials. And as you are batching receipts, you are reducing the AR on the financials. And the fallout is either, in this case, since it's reservation deposits, it's going to be a liability that sits on the books until those residents move into the building. And then typically that's when this liability is going to go away because now that they've moved in, now, in our industry, we can count that as revenue. And so in some later videos, you'll see the move from the balance sheet to the other important financial statement, which is the profit and loss statement. You will see how that money moves from the balance sheet to the profit and loss because now it's real life revenue, and your accountant will be able to equip the financials with that revenue, which is what we want to see. So step one, step two, step three, charging the residence ledger. We're depositing the money in the bank, and then now we're going to go into the ledger and receive that cash, and ultimately the financials are going to look like that. And now that file kind of goes away until that resident is ready to move into the building, right? Call it next month, next 2 months, whatever. And now we go through the move-in process, which we'll dig into that in the next video, where we go and see what the move-in process looks like in our accounting system, and also try to stack it up with the financials, because I really want you guys to be able to make the connection of the things that I'm doing. How is that impacting the financials? even if it's the first time that you've heard about it, how is that impacting the financials, and why, are the property accountants asking me for this? Why is that the team at the operator asks me for these reports? Now you kind of get a good understanding of that side of it, and knowing we really mean that when you guys are making these entries, you guys are building the financials. So on this side, you're building the balance sheet, you're coding AP invoices, you're building the profit and loss statement, you're building your residents, that's the revenue, like all that stuff is building the financials. And so if we can create good processes on the front end, we can ensure that we have good financial data. So the folks, the stakeholders that are leaning on that and interpreting that data, they know it's accurate. Okay, so that's the reservation process. We could get into situations where you have discounts and all that stuff accounted for, and we'll maybe save that for another video. Because if the reservation deposit is normally $2,500, but there's a special running, and we say, okay, well, $500, and we'll reserve the unit. Well, your charge that you put on that residence ledger won't be $2,500 because it will only be $500. You can recognize that discount at the time of move-in. And so we'll do some move-in scenarios, because I know many of you have had instances, where you're getting certain incentives for marketing and it may not be clear. And we want to know, okay, how do we make the financials match the intent of this incentive? And so a lot of times they're community fee discount incentives, reservation deposit incentives, whatever you want to call it. And we want to be able to make sure that we are able to account for that appropriately. Many of these financials need to be done on a GAAP basis. And so your property accounts have to make sure that they're recognizing that. So again, in that case, if it was only $500, we would just charge the ledger for $500 instead of the $2,500, and then that additional $2,000 of discount, we can show that as a discount when we move the resident in. So I mean, that was the reason for the call today. We wanted to dive into, we want to take it slow. So I don't want to do reservations and then move-ins, then move out to all-in-one calls. We want to take it slow. Whether you're watching now, or you're going to rewatch this, ask the questions, think about the scenarios that you've had with reservation deposits and the challenges that you may have had, or even if it's not even on capturing the data, but are you just getting the reports that you need? Is there a good process between the handoff from marketing to the business office, right? And just being able to capture that data, when we get to move-ins, understanding the incentives that are being offered. Do you understand the incentives that are being offered in your community? Is there a good conversation there where the words that marketing, speaking to the families, that we also understand, okay, what is the accounting tied behind that, right? So we've been doing this for quite a while, and we've seen a lot of different incentives. Very creative incentives, and we want to just make sure that the financial data is being reported and reflects the intent of those incentives. So hope that is helpful. Feel free to reach out to us if there's just support, and you're just like, hey, you know what, I want to bounce this idea off you, right? So I'll give you guys an email to just send support requests to, and our team will give it a shot and see if that we can help guide you in the right direction. But that's CBO support@TatumAccountingServices.com. Once again, that would be CBO support@TatumAccountingServices.com. And would love to hear just any challenges, any things that you've seen, make up names, change names, whatever you want to do, just to speak to the situation. And our team, again, and we've solved quite a few of these issues in the past, and we've probably got some good insight, even if it's just some process changes to think about that can help your business office run smoother, because that's the goal, right? Like I said on the top of the call, if we can help impact and help business offices and all communities win, and business leaders be more confident about their job, that's what we want to do. So no reason to hold these calls very long. As we get questions and things, we'll talk through them. But the goal of this call was just to dive into that reservation process, which is what we call the first step as we go through the business and accounting cycle. Okay, well, I am going to once again thank you guys for just taking this time and hanging out with us, and be looking forward to hearing from you guys. Thank you so much.